Good morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, March 2nd. All right, big explosive move to the upside. Yesterday morning, we talked about how the futures were up about 11 handles after the Donald Trump address to the nation. And it's really funny, you guys. If you looked at the transcript or you looked at the key bullets on what he was speaking about, nothing really lined up in the sense that exactly I'm doing this on this date. There were no dates. There was no everything was really vague, if I make a quick point here. And yet the market continues to go up. What is that telling you? We are on our last and final approach to this bull market run, guys. We are getting very close. We are not there yet. I'm not calling a top. When we call a top, you guys will absolutely know about it. Right now, we are not calling a top, but we are very close. And like I said, buy protection. Or for those of you who are position traders who like to position themselves with the market, legging into a short trade, a small short, easily as the market continues to go higher, you could do that. Or I would not be initiating any longs up here at all. Like I said, even if the market goes up a little higher than where it was on Monday, I would not be chasing longs here. This is all based on sentiment, on greed, and the markets are going to reprice itself. It's going to price itself, and you have to be careful here, guys. We have not had a pullback, right, until the November elections, and even then was not even a pullback. It was a mild little pullback. Since 2009, we have not had a correction. That is unheard of. History is in the making, but history will be in the making to the downside. You have to understand, markets cannot be stretched this far, this fast, without a correction, all right, or even a pullback. When does that happen? I have no idea. Does a correction need some sort of a catalyst? I believe so. And it's going to happen when Donald Trump starts to mess up. And that's really what it comes down to. Right now, they're all basing on, Donald Trump is going to be great for the economy. I do believe so. I really do believe so. I think it's going to be great for small business. But you can't front run what Donald Trump is going to do, what he has yet to do, and reprice stocks that are extremely overvalued. I mean, throw the indicators out the window, guys, because they're not working. PE models, not working. It's all based on buy right now and don't stop buying until it ends. And I've heard one guy said, close your eyes and just buy the market. That was a commentator. I'm not going to even mention the person's name on one of the business news shows. Absolutely insane for even saying that to anybody. That's just crazy. Anyway, we had a bunch of emails yesterday. Hey, what's the high probability trade? What do you mean? Can you elaborate a little bit more? So I figured, let me show you. Yesterday, markets gapped up from a close of 236.49 to the opening of 238.40. That is an extreme gap. With any type of a pullback, meaning I would not short that right off the bat anyway. That's something that I would not do. But I would be looking for some sort of a pullback to an average. Pick your choice, guys, the 20, the 8, the 50, and then look for a higher prices and start to kind of stair step their way higher, right? That's what I'm looking for, high probability trade. This is not high probability trading. If you bought it here, yeah, you made a little bit of money, but your risk was much greater, okay? Because what happened? The market really didn't do much. If you looked at it, we did, and don't get me wrong, the market went up, but we went like this, we went sideways. We had one little pop, sideways, one little pop, and then we went sideways pretty much most of the day, okay? That to me is not high probability trading when you have a big gap up like this. Now, high probability trading when you have a big gap up, and let me just erase this and I'll show that to you one more time. This is what we like at TMT. Let me grab a cursor. When you get a move like this to the average, sort of a bull flag type pattern, right? From the average here, and then you take out the swing high of that bull flag, and then you start to move up. That's a bull flag. That is a high probability trading, because what happened is you've tested the pullback. The pullback was tested and held, and then that tells you that the shorts are trying to short, and not going to happen. They're not going to have it. The bull's not going to have it, and then we start to move higher again. That is high probability trading. So what do you do when something like this does not happen? When you're indexing, you step aside. Nothing wrong with stepping aside, guys. You let today, you let today's market see, then decide, are we going to give back half of the gains? And if we keep half of the candle on the engulfing, and I'll show that to you, then we can go for higher prices. Our scenario chart already hit our target in less than a couple of days. Let's call it less than a week. Absolutely insane. 30 years doing this, I have never ever seen a market that does not go down and that people want to buy, continue to buy at these lofty levels when you have a fully valued market. It's absolutely crazy. There's no discount to buying stocks unless you're buying an individual stock, or I should say an index. Let's put it that way. All right, let's take a look at the UUP. Nice big explosive move back up above these averages. Like I said, do not count the dollar out. The dollar is going to be driven not only on what happens with the economy, but you're going to have also at one point a safe haven trade, right? Money's going to flow into the U.S. dollar, be parked and held. Same thing with gold. Gold loves the inflationary environment. All right, it's also an interest rate rising environment, which they're not so keen on. But if you take the inflationary environment and a safe haven trade, it's going to trump the rising interest rate environment. So just keep an eye on that. We'll show you that next. TLT, no trade here. We talked about that. We see we had. Let me just get this out of the way. I wanted to show you the fear and greed. We don't have enough time, but it is at about 81%. If you look at the CNN fear and greed index meter, that's about 81% extreme greed. So just to keep that in mind. TLT, no trade again. Remember, guys, I'm looking at the USB weekly at 148 is going to be the 200-week moving average. If we break below, we start looking at short rallies. If we break back above the consolidation of that move, then we'll be looking to buy pullbacks. But right now, this is dead money. I would not be touching TLT. GLD. All right. Finally got to move lower. We caught the 21 EMA on the daily chart. I'm just showing you some of our Pro Trader Premier video levels free for today. Take a look at these. These are valid. And you can see how it held. And then GDX. We talked about GDX really diverging away from the metal itself, the miners. So this held this right shoulder. It's going to need to hold. If it breaks below it, I'm going to negate this inverted head and shoulders pattern. This will be a failed bullish pattern, and we'll go back to looking at when the next level is, and hopefully it stops. If it does do a double bottom and hold, then we'll be looking to buy. That'll give us a truth to the move, if you will, meaning that if this move from this bottom here pulls back anywhere, wherever it pulls back, if it's a double bottom, fine. If it's a higher low from this previous low, we'll just connect that. And if it consolidates and takes out the consolidation, moves higher, that is going to be validity to the move that just happened, and that we are now on our second phase of this bull market in gold. And I do believe we are in that. Let's take a look at the spiders. And I mean, guys, what I did is I want to show you. I did an RSI 5 and an RSI 14, right? A 14-day and a 5-day. We are now at 2.82% above the 21 EMA on the daily chart. That is insane for anyone looking to buy stocks, okay? But I will tell you that this was heavily driven on algos and dark pools and HFTs yesterday, and of course inflows of retail, and that also helped because we had mutual fund inflows come in the first day of the month, usually a day or so before, a day or so after. But this is absolutely insane. I would not even be thinking about putting money to work here unless you're day trading. Day trading, absolutely follow the trend. The trend is your friend. You buy pullbacks until it hurts, and that really is the initiative. And if the index is so far out of skew, then you look for stocks. I would not be touching anything here, looking to buy anything. If anything, I would be willing and able to start shorting the market when the time is right. If you have a big enough book, I'd start legging into a short. That's just me. 60-minute. Here's our scenario chart. We were looking for the 240 to play out, and well, guess what, guys? We hit 240 right here, right off the bat. So no pullback. So this is now, I believe, if we get a pullback to this band again, this would fill the gap. And let's see if we move higher or we continue the move lower. But this could be a blow off top. It is not right now. I want to see a little bit more evidence if we move higher. If we can go, I would be honest with you guys, if we can go another day or two and even go even higher and stretch this rubber band, this market would just literally just dump. And I'm going to tell you that I could see it. I see algos, I see the dark pools selling into all of the rallies, and then they're going to continue to do so until this market starts to break. All right, and it's only a matter of time. You cannot stretch that band too far until it happens. Here's the transports. You could see here really didn't participate. Yeah, it cleared the hurdle, but it didn't participate like the S&P. Dow. Here's the IWM. Same thing with the IWM. The Russell did not really participate. So I know that you guys, there's a lot of you guys short out there in the Russell. I would just be careful because it could play catch up. And again, if you are short and you have more room to leg into, pick a spot, based on your trading plan. All right, but I do like I love the Russell long, not here and not at these levels. I want to see a nice good correction in the Russell and start to buy it and pick up the pieces when everybody wants to sell it. Last is the Qs. Same thing with the Qs. You see the big move up. We had the consolidation. Absolutely insane. Apple, Amazon, Google, fully priced, guys. I mean, stay away from stocks like that. Look for value if you are going to look for stocks that you want to accumulate. And if not, if you are looking to just a day trade, just get some stocks that are moving, get an average true range of $1 or more. All right. Have a great day. We'll see you tomorrow.